Welcome back, everyone. So today we are going to discuss a very interesting tool which we are using in the technical analysis, right? So today we are actually going to tell you what the Fibonacci retracement is and how we do use it, right? So now coming towards our first title, let me tell you, Fibonacci is something very interesting and it has a very long history, right? So before going towards the important and the major things, let me tell you some very basic stuff with the Fibonacci. So the Fibonacci is basically, it is a numeric series. Okay, so as you know, we have only two numbers. If we talk about the natural numbers, we have only two numbers which are 0 and 1, right? So when we talk about the 0 and 1 number, we just adding the numbers, okay? How we are adding the numbers? 0 plus 1 is equal to 1, and the next number is 1. So you are basically adding this number, this one number, with the previous one, okay, with the 1. So 1 plus 1 is 2, and so far we are going, ahead. 2, we have the result of 2. 2 is going to add with the previous one. 2 plus 1 is 3, and 3 is going to add with the previous one, which is 2 plus 3 is 5. So if we are going to do this for the, for the unlimited time, we are going to have a lot of numbers, the natural numbers. So this is basically, the Fibonacci is a series of natural and numeric series number, okay? So for example, we have, after the calculation, we go 1, 1, 5, 8, and up to so on, right? So let's consider we have taken these numbers until 610, or even you can take until 89 or 55. It's all up to you. This is just the basic information I'm telling you. So now these are the natural numbers we are talking about. Now coming towards some calculations. Remember, when we are talking about Fibonacci, you should consider our Fibonacci tool as the golden Fibonacci number. Why? Because the golden Fibonacci number is something which is calculating in our analysis, which has been calculating in our analysis to find the golden number, the golden rule. Okay, so now coming towards some calculation, these are some very important and the big calculations. So now, as you can see, we have this number of series, okay, and if we divide the last number with the previous one, for example, let me highlight it for you. So for example, we are dividing 610 with 377. We have this number, okay? So the next, if we divide 233 with 144, we will still have the same number. And if we divide 89 with 55, we still have this same number. So this is not the magic. This is a very, very mature science behind this all Fibonacci structure. So as you can see, even if we divide or multiply the numbers, our Fibonacci series, we are going to have the same number always. Okay, so this is what I'm going to tell you in our next slide. So now, as you can see, we have divided our series like this. Now, if we divide our series, for example, okay, so now coming towards the next slide. So previously we have, what we did, we actually divided our series on the backward, right? In the back direction. Now, coming towards on the next, wait a minute, okay. So over here we have the next scenario. If we divide 610 with 377, we still have 61.8. This is the golden Fibonacci number. And if we skip the one number and divide the next number with the previous one, like 144 with 89, we will still have the same number. And again, if we may skip this first, again, the next number, and then we divide, for example, 233 with 144, we will still have the same number. So these are our golden Fibonacci numbers. And for example, if we are reversing all the process, okay, what we're gonna have? So for example, we have this series. We are going to divide the last number with the next previous one. We are skipping the, the previous one, and we are dividing with the next previous one. That will be 2.618 value that we are going to get. And if we divide the next number and skipping the middle one, and the next number is 55, we will get again the same number. So this is how we always get the golden Fibonacci number, right? So the same, this is another type of calculation. So for example, if we divide the number over the previous one, as we have discussed this before, so if we divide 610 with, let me show you the number, with this 233, we're gonna get 2.618 Fibonacci number. And then again, 144 with the 55. Look, we are skipping the middle number, right? But we are getting the same number. All the time we're getting the same number. So these series are basically the natural numeric series, and always whatever we calculation we do perform in this series, we're going to get the golden Fibonacci number, right? So now these are some partial levels for the Fibonacci. As you know, we have some levels. We are going to talk about these, and in detail how we're going to add these levels in our Fibonacci and how we're going to use these levels, right? So we have some golden levels: 0.236, 0.38, 0.61, and so forth. So now, how do we calculate these number? Look, as you can see, why do we use Fibonacci in the financial market? Fibonacci is something which is telling you the market continuation. So, for example, let me draw some simple uh, chart for you. For example, if the market is going upward, and if the market is coming to the negative direction, okay, the opposite direction, it means this is the continuation, okay, and it is telling us the market is going for more potential towards its direction. So this is how, that's why we use Fibonacci in our financial markets. Why? Because the overall momentum of the market is still bullish, still long. So if the market is going for the retracement, we're gonna use the Fibonacci in our retracements for the levels, for the golden levels. Okay, so for example, we have the retracement of 23 or maybe 38 or 61%. So we already have the information about the retracement levels. So when we have these informations, what we can do, we can exactly measure the retracement levels, and then we can go for the next momentum according to the market, right? So this is why this is very important. The Fibonacci is very important in the financial markets. And uh, Fibonacci is used by many big financial firms as well, right? So this is the very major tool. So now, coming towards something very interesting now, what Fibonacci is, I'm going to tell you the entry and exit levels, trade duration, analysis time frame, and confirmation. Now coming towards some technical stuff. Okay, so meanwhile, if you guys have any questions, do let me know in the chat option, and I will be replying you after the webinar. So this is just a simple MT4. Okay, this is the MT4 platform, and uh, from from any broker. So here is, we have the option for the Fibonacci, okay, for the Fibonacci tool. So just you have to go there, select this Fibonacci tool, first we are going to see how we're going to use the Fibonacci and to set the Fibonacci. As you can see, the colors are not prominent. We don't know which are the levels at what side. So now from here we are going to the Fibonacci properties. The first thing you have to do is change the color, because this is the not good color for the white background. You can use it, by the way, you can choose any color according to your background color. So I'm just doing this. So now the color of the Fibonacci is black. Okay, so we can see the levels, which are by default levels, and these are 0.01, 23.6, 38.2, 50.0, 61, 0.8, and 100, right? So for my suggestion, if I go for the analysis according to the Fibonacci, I am going to add the levels. Okay, this is another learning. For example, how are you going to add the levels? Just go into the properties here, and over here we are adding. Look, we already have 61.8 level, right? So the next level is, which is very important according to my analysis, is 0.705, and in the description you have to write 70.5, right? So this is add another level, and this is 0.786, and in the description you are going to write 78.6. Okay, and the next, it is also very important level, that is 0.888, and sorry, 0.886, and in the description you can go with 88.6. So these are the levels. You just have to add these levels and then go for OK. So here we have the Fibonacci tool. Okay. So now how we going to use them in our use this tool in our analysis? Now, before getting ahead to use of this Fibonacci tool, let me tell you why and on which side of the market we are going to use the Fibonacci tool. Now, let me draw something for you. There are different time frames in the market. There are different structures, behaviors in the market. So the question is where we have to use the Fibonacci tool, right? So as you can see, the market is moving over here. You can select any pair. This is pound USD. You can, by the way, select New Zealand USD or AUD USD. It all depends on you. Okay. So I'm over here at the pound USD. Now, as you can see, the market over here is moving like this momentum. This is all bearish. Okay. So if we go to the bigger time frame, for example, I am going to the weekly time frame. Okay. So on the weekly time frame, you can see a quite different scenario. Market is going bearish, but as you can see, we have big impulse. I'm going to tell you what is impulse and what is correction, by the way. What is impulse? And this is the correction, impulse, correction, impulse, correction, and impulse, right? So Fibonacci actually works in all time frames. Okay, if you take it in the weekly, on the weekly time frame, if you take it on the daily time frame, on H4, H1, it's all up to you, up according to your strategy, according to the way you are trading. But we are using the Fibonacci tool only in our aggression of the market, only in the impulse side of the market, right? Only the major direction side of the market. So for example, coming towards the daily, we can see the market is focusing bearish. Okay, the market momentum is all bearish. Okay, and if we go simple in this, we can see the market is making impulse, correction, impulse, correction, impulse, correction, impulse, right? So if we are going to apply, if for example, if the market is going bearish and we have this impulse, this bearish impulse, okay, or maybe you can take any impulse. For example, this is the impulse. Okay, so now we have to calculate. Remember, after every impulse there is always a correction. okay, before the next momentum, before the next bearish impulse. And after every bullish impulse, there is always the negative correction before the next bullish impulse, right? So if we have, for example, if we have this impulse, we must wait for the correction, for the retracement to the downside. And for the downside, we have to measure the retracement levels. And this is the thing we are using the, we are using our Fibonacci tool to measure the retracement and then going for the next opportunity, the next impulsive opportunity. So for example, we have this impulse, sorry. So we have, I'm drawing here, we have this impulse, okay? This impulse is over. And now what I'm doing is I'm just applying the Fibonacci here to see the retracement, okay? So as you can see, we have different levels. We have 23, 38, 50, 60, 61, 70, and 78, and 88 levels, okay? So if the market is going for the retracement, it can go up to 23%, it can go up to 38%, it can go up to 50%, 61%, 70, 80, 88, and then it can crash. So these are the levels from where we have to see the continuation, from where we have to see the market reversal again, market continuation again for the confirmation to the next momentum, okay? So what we're gonna do is after the impulse, we just simply apply our support and resistance level in according to the Fibonacci levels. So for example, this is our impulse. I'm going for the larger time frame to give you more accurate. Okay, this chart is fine. So I'm considering this impulse. Okay, this is the whole impulse. So I'm just applying our Fibonacci from here to here. Okay, so this is the overall bearish momentum of the market. Now, for example, I'm looking for a retracement from these areas. So what are my levels? Simply, you have to do is mark these levels. Mark these 23, 38, 58, 61, 70, 78, and 88 levels. But first, you have to mark the high of the impulse and the low of the impulse. Okay, so these are the major support and resistance area. Okay, so what we are looking, okay, the market is coming down, over here, and it will retrace to to these levels, and it will go down again. Okay, because this is all a continuation. The market momentum is all bearish. So simply I'm just marking these level, this 23, okay, this 38%, and this is 50%, and this is 61%, and this is 70%, 78, and 88. Okay, so look, we have many support and resistance areas now. We have many levels, the major levels, the basic highs and lows. By the way, regarding the highs and lows, we will have a very brief session in the future. So I'm just changing the color of this high and this most low level, right? So, okay. So I have changed the color, and in between here we have the levels. We have the Fibonacci levels from where I'm looking for the market rejection again, market confirmation again for the bearish side. So just draw a simple scenario. What we are looking? We are looking, okay, the market is coming down, and from here it can go up to 23%, and it can drop here, or maybe it can go up to 38, or maybe 50, 60, 70, 78, and 80, 88%. And it can drop again. Okay, so this is what we are looking. So now the next thing is, okay, the market is going for this level. Market is going to test these levels, but how we are going to enter in the market? So this is all about the confirmations, right? So as you can see over here, we have the entry and exit levels. We have the trade duration, analysis time frame, and confirmation. So according to, okay, over here. So according to these levels, for example, the market is going on 38% of the level over here. Okay. If we have two candles closed below these 23.6% Fibonacci level with the bearish rejection, because the market is bearish. Okay, if we have two candles continuously close below this 23.6 level, then there is a very high probability the market is going bearish again. It is going to continue its bearish momentum again, right? So if we don't have any kind of confirmation over here, we don't have any candle closing over here. For example, if the market broke this level, there is a possibility that market will test this 38% level. So at least two candles are important for the to confirm the market direction, right? So for example, we got, let's have a look on the previous examples. So for example, we took this impulse, right? This impulse. Okay, so this is the impulse. Okay, we put our Fibonacci level right here. And for example, it, it started continuation again bearish. So the question is, how much time do we have to sit in the market? Okay, so for example, the market is going for the bearish direction. Market is going to have, rejection on 23% level. Then always remember these high and low levels are very important. Okay, so if the market is going for this area, okay, if the market is going to reject from 23.6 level, it means the market is going for the next impulse. But still we have a very strong major support over here. This is, as you can see, this is the impulsive low. So we have to enter in the market until this level. Okay, and if in the future, if the market is going to break this level, for example, okay, so if the market is going to break this level, then we can go further bearish momentum. But for the time being, for the best trading strategy, we have to enter in the market till, for example, from 23, we can go with this level, this low level. And if the market is going to reject from 38%, we can go with, again, with this level, this low level. And if the market, same, if the market is going to reject from this level, we can have this this room for the bearish momentum. And if the market is going to break this level, then it can go down. So this is how we enter in the market, using our Fibonacci tool. So coming towards something more deep, like this is the weekly time frame, and this is the whole bearish momentum in the market. Let me delete everything. So I'm deleting all levels. Okay, here I have deleted all levels, here and here. Now, for example, we are taking just, a very short impulse. So for your understanding, I took, this is impulse, this is correction, and this is impulse, again correction, impulse, correction, impulse. So I'm going to apply the Fibonacci on this impulse, okay, on this impulse. So now what we're gonna do, just simply go on the Fibonacci tool, just apply week to week. It's by the way, it's up to your strategy, what strategy you are using, but I will go to week to week measurement in the Fibonacci, right? So for example, we have this market, the impulse, and what's next? We are going to draw these support and resistance, major support and resistance here, and then applying the levels. This is 23, and this is 38, and this is 50, and 61, and 70, 78, and 88. Okay, my apologies. Okay, so this is 88 level. Okay, right, perfect. So what we was expecting, the market went bearish with the impulse, and over here we were looking for the retracement and then a bearish drop. So we applied already, the levels. So as you can see, what market did, market went exactly, up till this 38.2% Fibonacci level, and it went down. Okay, it started its continuation again from 38%, and as you can see, we have the very strong confirmation, the confirmation of two bearish candles closed below this 38% level. So for example, if we have these two candles, okay, these two candles, we are just waiting for the confirmation, for example. So we can enter in the market from this area, okay, and we can set our stop loss, above the most recent candle, the most recent bearish candle over here, and we can go with a nice bearish formation, with the nice bearish direction. So this is how we can catch the market impulsive behavior using Fibonacci tool. So for now, uh, this is the Fibonacci regarding our retracement levels. So let me take it here. Okay, so we have studied entry and exit levels, trade duration, analysis time frame. I'm going to explain this analysis time frame, what the analysis time frame. So as I have explained to you, that we can use different time frames, because Fibonacci is not a tool for a specific time frame. It is a tool we can use on every time frame. So for example, this is the weekly time frame. We can go with the smaller time frame like daily, H4. So on the H4, we have this type of formation, this type of market formation. We have this bearish impulse, this is correction, and then impulse. So what we're gonna do, very simple again, you just need to go to the Fibonacci tool, just apply the impulse, the Fibonacci tool on the impulse, okay, over here, and just simply apply the high and low levels. These are the support and resistance levels, okay, and simply mention these Fibonacci levels. So you can see the price has rejected exactly from 38.2% Fibonacci level, and it has given us the confirmation with the closing of two bearish candles continuously. So if we have two bearish candles closing below this 38.2% level, it means we have the confirmation that market is going for the bearish direction. But remember, this major support and resistance level is very important, very important. So for example, if we are going for the bearish momentum, okay, we are going for the bearish momentum here, we have to put our target first here and our stop loss above this 38% level, or you can use your stop loss for to minimize your risk above the most recent bearish closed candle here. Okay, so we still have a very nice risk to reward ratio. So in the future, what we are going to learn, for example, if the market is going to break this level, how we can go for more bearish or maybe the bullish momentum in the market. Okay, so this was all about the bearish momentum. Let's have a look on the bullish momentum, on the bullish side of the market. So let me clear this thing here. Okay, perfect. So okay, so we have this bullish scenario. If the chart is messy, okay, perfect. So I'm taking an example on this impulse because I'm using this. This is the very simple example because I have to make everything clear. So this is the impulse, this is the bullish impulse, this is all the retracement, and again impulse, as you can see in the market. So what we have to do simply, and vice versa, by the way, in the bearish market, what we did, we started Fibonacci from top to bottom. Okay, but if we talk about from about the bullish direction, we have to take our Fibonacci from bottom to top. Okay, so this is the impulse, this is the impulse, and simply just follow the rules. This is the major support, this is the major resistance, and simply here we have levels 23, 38%, and 50%, and 61%, and 70%, and below 78 and 88%. So as you can see, we have these levels. This is all impulse, and we were expecting the market is going for the retracement after this impulse. It can go like 38%, 23%, 60, 50%, 61% before the new bullish momentum. So we can see the market exactly rejected from this 23% level. Okay, and the market closed with a very strong bullish momentum candles. There are more than two candles, which means this is the most reliable and high probability market setup. Okay, so if we found more than two candles confirmations, it means this is the most high probability setup. So you can see this is the impulse and this is all the correction. The market exactly just tested 23% Fibonacci area and it went up. Okay, so this is how we use our analysis. We use our Fibonacci using the market to see the market behavior. So if we are entering here in the bullish momentum, after the rejection, we can we can enter from here. We can set our stop loss below the most low candle in the correction. Okay, so this will be our stop loss. We can set our first target here, and we can increase our target after breakout of this major resistance area. So this is what all about the Fibonacci tool. I know many of you guys want to understand the major support, the major high and low levels, the Fibonacci to set the targets, to set the stop losses, and how we can exceed our targets, how we can set our targets, with the big rewards. I know you have a lot of queries about it. We are going to have another session in all. We are going to discuss all these things. Because the breakout is a very different story. If we go to the breakout, it will take more than more time, so we cannot cover the Fibonacci. So this session is exactly all about the Fibonacci. So this is the time frame which I told you. We can use the Fibonacci with the different time frames on H4. We can use on daily, M30, any time frame you are trading. You just have to capture the impulse. Okay, the impulse is very important no matter what time frame you are using. So let's see, this is the daily time frame. Okay, what I did, I just captured the impulse. Okay, so no matter if you are using H1, if you're using M30, you just need to capture the impulse. So in M30, we had this impulse. As you can see, we had this impulse. So this is the high and this is the low. Just apply the Fibonacci over here. So this is the impulse. The market rejected exactly on 38% level, and it started dropping again. Okay, so it all depends on the if how you find the how you find the aggression, how you find the aggressive side of the market. Okay, if you are good in it, you can do your analysis using the Fibonacci tool. So for going towards the impulse and correction in detail, again, we are going to have a very brief discussion regarding impulse and correction in the future. So I want you guys to make sure that you are strictly watching my analysis, and if you have any questions regarding these analysis, please don't hesitate to ask me in the comments so I can answer you and I can approach you personally to assist you with your trading. So this is all about time frames. So going towards the confirmation, as I told you, the confirmation is at least we should have two candles, okay, rejection for the confirmation. Coming on the MT4 again, I'm going to show you the confirmation in detail now. Okay, so this is the scenario. Okay, the market is bearish. This is the bearish market, and the market is making correction here. And we got a rejection confirmation on 38% Fibonacci level. Look, the market, what market did? Market exactly provided us two candles, two bearish candles below this 38% of Fibonacci level, below this golden Fibonacci level. So when the market is closing two candles behind or below or above, it depends on the market direction. So over here we have the bearish direction. So if the market is closing two candles below the Fibonacci, below any Fibonacci level, okay, it can be 50, it can be 61, 70, 78, 88, any level. In this situation, we have 38.2% level of Fibonacci. So if the market is going to provide us, going to close two candles, at least two bearish candles, because this is the bearish scenario, then we can enter into the market for the next possible bearish direction or the bullish direction, vice versa. So in this case, we can see we have two bearish candles. Okay, this is the solid confirmation. So what we should do, we just enter the market after closing these two candles. Okay, so we can enter the market from here after closing this candle, and we can set our stop loss here above this candle, and we can set our first target, this support area. Okay, and if the market will going to break this area, then we can exceed our target with a very good risk to reward ratio. So this is how we use the confirmation. So this is all about the bearish market structure. So let's talk about the bullish momentum of the market. So how we apply, we have already learned how we apply Fibonacci on the bullish market. So let's see what are the confirmations we have to look for the bullish momentum, right? So let's see on the current market situation. I think you will not get it. So okay, here, that's good. Yeah, that's a good example. So I'm taking this impulse, okay, and this is all the correction, and we had this impulse. So this is a very nice example. So as you can see, the price over here started the bullish. Look, this is M30 time frame. So all I'm doing is I'm just watching, I'm just seeing the market aggression, the impulse side of the market. Okay, so I'm just applying the Fibonacci on my impulses and watching for the retracement for the next impulse. So after applying the Fibonacci of this bullish impulse, simply just follow these steps. We have applied this high, low again, and these are the levels. 38, this 50, and 61. Okay, so now as you can see, the market, what the market did. Okay, after this impulse, the market went down, retested this in between 38 and 50% of the level. It is rejected with two strong bullish candles. As you can see, these are the candles which I am talking about. These are two candles, very strong bullish momentum. So after this, we can just enter into the market. From here, we can set our stop loss below this most recent bearish candle, and we can set our target on this major resistance area. So this is the scenario of the bullish market. Okay, so and this is it. These are the confirmations of the Fibonacci, and these are the confirmations. We have done the entry and exit levels, trade duration. Look, trade duration is all depend, as we have already discussed this. Trade duration is all depends on the time frame. If your time frame, if you are doing your trading on the smaller time frame, you definitely going to enter in the market with, with the according to your time frame. So it will be your smaller trades if you are going for M30 or M15. So it's all depends on your time frames, right? So analysis time frame, as we have discussed, we can use the Fibonacci according to the different time frames. We can use it on the weekly, we can use it on the daily, on the monthly, on the M30, H4, H1, any time frame you can use it. And the confirmation, as I had told you, there are different confirmations. By the way, let me tell you, there are different confirmations. So the basic confirmation is closing at least two bearish or bullish candles above or below the level. So in the future, we have a very detailed discussion webinar according to the for the impulse and correction and the confirmations, because confirmation is not something you can understand in 10 minutes or 15 minutes. It's a long topic, so I will make sure that you are actually learning it. Okay, so the confirmation, when we talk about the confirmation, it means the market, we have different type of confirmations according to the candlesticks, right? So we are going to have these two webinars about the impulse and the corrections and the confirmations. So hope you guys have enjoyed this webinar, and if you have any questions, you can ask me in the question box. I will reply you after 5 minutes. Okay guys, hope you have enjoyed this free webinar. So I'm just going to announce the next webinar, for the beginners. It will be the introduction to MT4. It will be held on Tuesday 27th September, and for the advanced trading we have a webinar on Thursday 29th September about Ichimoku indicator. So make sure guys you are going to attend these webinars, and we'll see you guys in the next session. Take care.